Thank you, Christina. Again, we're going to go through some details here on internal controls. A lot of times we get asked a lot of questions on how to improve internal controls or what are internal controls and how can we better improve them here at our organization. So that's the main purpose of our presentation here today. As you can see by my bio, I've been with the firm since 2004, so over 20 years. And primarily my area of focus are local governments and a few nonprofits sprinkled in, but for the most part, just local governments. So with that being said, I'll let Erin do a quick introduction of herself as well.
Good morning, everyone. I am Erin Clark. I am another member of the firm here at SEK. I joined the firm in 2009, which gives me about 16 years of experience. And I split my time between both governmental and nonprofit audits. So for government work, most of my involvement is going to be with the Maryland municipalities. And I have a combination of audit clients as well as accounting service work for local governments.
Thank you, Erin. So before diving into internal controls, I think we've gone far too long without telling a joke here this morning. So I went to Copilot, and as some of you may be aware, Taylor Swift announced that she has a new album coming out. So I asked Copilot to tell us a Taylor Swift internal control joke. So without internal controls, your audit trail might look like Taylor Swift's dating history: confusing, dramatic, and full of red flags. So that's as good as I can get. And by I get, like I said, I pulled it from Copilot, but tried to offer a little bit of humor here this morning as we dive into internal controls just a little bit deeper. And just to build on what Gary and Krista have already presented, theirs was focused primarily on federal internal controls and federal grants and compliance. We're going to take that a little bit deeper and just go over internal controls as it relates to your overall organization, not specifically related to grants, but just internal controls in general. So some of this may be a slight overlap and just a little bit more detailed for the information that was just previously covered. So the first thing I'm going to do, it's going to be the only time I'm going to read a slide, but I do want to read a definition here from COSO, and that's the Committee of Sponsoring Organizations of the Treadway Commission, for the actual definition of an internal control, which is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of a specified objectives. So I realize that's very wordy, but I think the last piece of that is what's important. It's just that reasonable assurance for the achievement of a specified objective. And really, what's that looking at is the overall operating effectiveness and efficiency of the operations. The main driver here is ultimately to ensure that reliable financial reporting is available to the users of the information. And that is both internal reporting and external. So internal reporting are those monthly reports that are going to the board members or maybe reviewed by management, but then also that drives into or leads into the external audit for the external financial reporting, and then also making sure that you're again complying with any laws and regulations related to that. So just a couple of key concepts just to build on the internal controls a little bit here. We do have a few. Again, the internal controls, it's a process. It's not a means to an end, but not an end in itself. So it's ever evolving. It's always a process that's in motion and always circling back to it to determine what the best internal controls are in place for your organization. It is affected by people, and it's not just a policy or manuals or forms. And sometimes people think, okay, we have internal controls, we're good, we don't have to think about them anymore. Unfortunately, that's not truly the case. They are ever evolving and need to be reviewed and updated and can be impacted by people. Again, Erin's going to get into a little bit of details related to fraud in a little bit, but when it comes to internal controls, you can ultimately have collusion, which is more than one individual involved in the process to circumvent those internal controls, and that's why it can be affected by people. And again, the other key piece here, like most items, it does only provide reasonable assurance, not absolute assurance. So because of what I just mentioned with the collusion as well as some other factors, it's only providing reasonable assurance that the internal controls are expected to provide. There are three types of internal controls. For the most part, they're very straightforward. We have our preventative internal controls. Those are going to prevent something from happening. So for example, you could have two check signers on a check. That's preventing one individual from writing a check to themselves. So that's a preventive internal control to prevent something from happening. On the flip side, on the opposite end of that, we have detective internal controls. and those controls are going to detect something that has occurred. So whether it's a misposting within a general ledger account, that's detected once it's occurred, and basically you're able to correct that after the fact. So that's what those detective internal controls are. And then the final one, if you were to detect something, obviously you want to correct that going forward, and that's what that third internal control is there for any corrective internal controls. There are five elements of internal controls that Krista alluded to earlier, and we'll certainly dive into the details of each of these in further detail. Again, I know we typically get a lot of information and we focus a lot on those control activities right in the middle there. And that's what a lot of times somebody hears the word internal control, their mind goes straight to the control activities. However, there are a lot of different factors that go into that to ultimately drive the internal controls that are set into place. So those five are detailed there: the control environment, the risk assessment, control activities, information and communication, and monitoring. So while we will spend the most of our time here in the presentation this morning going through those control activities, we will go over the other four elements as well. So the first one that we have is just our control environment, or our tone at the top. And I think this really just comes back in that first bullet point here where it talks about the control, or excuse me, the culture and honesty and integrity of the organization. And how do you set that? How do you set that tone to the top? And that's obviously not something that is a manual or something that's just in place when you come in. It takes time to build that. But on the flip side, it's something that can be torn down very quickly if you were to have an instance of dishonesty or non-integrity there that could pull that down or remove that culture from the organization. So how can you build that up? Again, I think some of these other points are really bringing that to light. You want to create a positive workplace environment. You do want to establish those code of conduct and the code of ethics, but unfortunately, it's not just establishing them. Again, reiterating the importance of them, providing training to the employees, and having the discipline over those. Another key piece of this is having a whistleblower policy, which I'll dive into a few more details here on the next slide, and also just keeping in mind your hiring techniques as well. So just trying to keep that, again, tone at the top throughout your organization. So what are a couple of practical applications? Again, depending on the size of your entity, that's could look in a couple different ways, but you do want to try to establish an anonymous whistleblower policy. So for a large organization, that could be a hotline that's set up. For a smaller organization, it could just be a box that's put in the break room. If somebody were to have concerns, they could put that in there, but you just want to make sure you have the proper controls, whether it's a board member reviewing those or somebody that wouldn't be involved in case somebody has a concern over somebody from a higher level management. As we mentioned earlier, again, you just want to try to establish those code of conduct as well as the conflict of interest, and as much as possible, just trying to enforce appropriate discipline for failure to comply with these policies and procedures. If you were to have a code of conduct and it's being ignored and there's no discipline, I think the other employees are going to be able to see that. And again, it's going to pull down that culture and that tone at the top that you're trying to build up. And again, trying to establish that strong moral code. The other piece of this is just placing the high degree of importance on internal controls. Again, a lot of times I think for a lot of organizations, we come in, that may be the only time your organization's thinking about internal controls, but it really should be done throughout the year and making sure that the appropriate internal controls are in place. And another piece, which again we'll hit on throughout a couple different places here, is requiring mandatory vacation. And we'll get to the specifics of that in a little bit, but that allows somebody else to fill in, and sometimes certain things may come to light if those duties are being completed by somebody else throughout the year. Just a couple of other items. Again, I know that nobody has this concern right now about maintaining a qualified staff in the workplace environment that we have, but you do want to try to maintain, obviously, as much as possible, a competent and honest staff. And even though it may be harder to find somebody to replace that individual, if somebody isn't competent or not being honest, again, the sooner you deal with that, the better that it'll be for your organization. And just a couple of other items here just to build on. Keep up-to-date job descriptions. That way, if you do have turnover, you're able to replace that individual in a timely fashion. Making sure that you're assigning authority and responsibility appropriately. And then the third last item here, ensure that employees are trained appropriately. Again, a lot of times as part of the audit, we come in and we ask the question, well, why are you doing this? And somebody said, well, I was never really trained, so this was my best guess at what to do. And while we can understand that, again, the more training that you can provide to your employees and the reasons for their performing of their duties, the more important that is for them to do that. The other piece of this that we keep in mind here as a polling question pops up is just to keep in mind as far as the review and document of performance. Obviously, at least on an annual basis, those performance evaluations should be performed, and you want to make sure that each employee is maintaining goals that are reviewed throughout the year, and again, at least at a minimal on an annual basis. So the next step that we have in the process, or the next element of internal control, is a risk assessment. And I know a lot of times people may think risk assessment, that's something that the auditors perform as part of their audit. We're not performing any risk assessments, but I think ultimately you just may not be documenting that process. But ultimately, a fraud risk assessment is important. And basically, what it's doing is considering what fraud or misconduct can occur against the entity by either employees, vendors, and or customers. Ultimately, I'm going to start with the end result here, that mitigation. These are the internal controls that you're going to set in place because of those risks. So the first step is just to identify any potential fraud risk that exists. So you're trying to determine what the universe is for the potential fraud risks that may be out there. Then you're going to estimate the significance of that risk. So, for example, if you have a risk of cash, if there's petty cash and you're not keeping it locked, that could be a significant risk that that petty cash could walk out the door fairly easily. On the flip side, if it's something as small as a box of pencils that you keep out for anybody to use throughout the organization, obviously a much smaller risk or much smaller significance of the risk there, and you may not need to have internal controls over that box of pencils, for example. So the next step, once you do that estimate of the significance of the risk, if you could just go back, Christina, I'm sorry, still working through that there, is just assessing the likelihood of the risk occurring. So you're going to assess how likelihood it is of something for that to occur. And again, once you kind of do all three of those steps, then you're going to determine what is the mitigation to offset those. And that exactly is what those internal controls are that you're going to set in place. So that leads right into the internal controls and those control activities that we have detailed out on the next slide. So here, as we get into the control activities, that'll just go through the policies and procedures that are ensure directives are ultimately carried out. So these again are those internal control activities or the control activities that are detailed out here. Again, what we're typically accustomed to as far as being the actual internal controls. And we have detailed out, I think, what you're used to seeing there, whether it's top level reviews, what you're looking at as far as reviewing operating indicators, your reconciliations that are performed. So that's not just bank reconciliations, but any reconciliations that are being performed throughout the year, the overall security of the assets. And again, as Krista alluded to earlier, having that proper segregation of duties and where you have as much as possible more than one individual involved in each of those duties. So what we've done here as we move forward is just go through the three main areas that we have related to internal controls. So we'll walk through cash disbursements, payroll, and cash receipts. And we always just kind of ask ourselves the what could go wrong when it comes to cash disbursements. And we have detailed out a couple items here. Some of them sound more significant than others, but they're all very important when it comes to cash disbursements. Obviously, payments could be made to fictitious vendors or to the wrong vendor. That could be made for the wrong amount. Duplicate payments could be made on an invoice, which doesn't sound too bad, whether it's that or whether it's made for the wrong amount. But those could ultimately lead to kickbacks. If you're overpaying a vendor, an individual involved in that could be making a payment back to an employee within the organization and ultimately stealing money from the government. The last item that we have are disbursements could be reported in the wrong period. And again, that goes back to that reporting, the financial reporting, whether it's internal or external. Again, you want to make sure that those disbursements are properly reported in the appropriate period. When it comes down to the examples for cash disbursements, we just covered a couple detailed out here. And again, just to reiterate it, we've highlighted there the definition of segregation of duties. But when it comes to cash disbursements, as much as possible, you want to separate the duties of approving the invoice for payment, opening the mail, issuing the check, signing the check, and reconciling the bank statement. Those are important segregations and important controls that can be done over the cash disbursement process. I know a lot of organizations also have procurement cards, and you just want to make sure that you have the same approval process for those purchases. So procurement cards, again, are being used in a similar fashion. Maybe you're earning points or cash back for your organization, and that's great, but you want to make sure that you have the appropriate controls, and as much as anything, make sure that receipts are maintained for all purchases that are ultimately approved. On the next page are just some additional details here related to cash disbursements and just some suggestions, most of which we've already talked through here, but just if you're thinking about the segregation of duties, some items to keep in mind. Again, you want to make sure that that approval process is by somebody separate who will be ultimately be entering it into the accounting system or software. If you do have the ability, the mail should be opened by somebody else other than those that have check signing abilities or check creating abilities. And then the last item I wanted to point out, or excuse me, related to checks, are just that they ultimately should be signed by more than one individual. We did have an instance before where we went into an organization and I asked, how many check signers do you have? And they said, oh, every check has 3 check signers, but it turned out it was just a stamp that was printed when the checks were run. Well, that really defeats the purpose of having multiple check signers if it's pre-printed or if it's a stamp that's included there. So you want to make sure that those individuals again, are somehow getting approval and ultimately with those checks having more than one check signer on them. Also related to bank statements, again, ideally they're reconciled by somebody without any cash disbursement or receipts duties, but at a minimum, you can have somebody independent of these functions review the completed bank reconciliation. So a lot of times what we've seen there are ultimately having board members that can perform that review as well because they're not involved in those duties, but does provide an additional segregation of duties over the bank reconciliation process. Just a couple of items to keep in mind related to petty cash on the next slide. We just have some additional controls over petty cash. Obviously, you want to limit that as much as possible to the amount of the funds held. And like everything else, make sure that you're maintaining the proper documentation over those expenses. Make sure that you have a log and you also have an internal control process for the replenishment of any petty cash. Make sure that that is reconciled to the general ledger and to the software. Moving to the internal controls over the payroll, again, we kind of asked ourselves what could go wrong, and these are very similar to the cash disbursement side of things. If you're a small organization, there's less of a risk of a payment being made to a fictitious employee. However, if you're a larger government, that could come into play, and you want to make sure that the appropriate process is in place for a new employee, and whether that's a report that's run to show any new employees in any given payroll, just to make sure that there aren't any fictitious employees there. Want to make sure that the amount that they are being paid for their pay rate is appropriate. And again, maybe that's a change edit report that could be run at the end of every payroll. And then also making sure that the hours paid are appropriate. So you'll make sure that they're getting paid for only their hours worked and nothing more or less. So just a couple of examples that we have related to payroll. Again, very much in line with the disbursement, just kind of on the payroll side of things, but recommend to maintain timesheets that are reviewed and approved, as well as any time cards. Make sure that those hours worked are reviewed and approved. Again, section check signing abilities, as well as reconciling the bank statement on a monthly basis as well. So again, very similar to cash disbursements, just on the payroll side of things. And then a couple of items that we had as far as suggestions related to payroll. You want to make sure that all pay rates are approved by your board at an annual basis. Unfortunately, what we've seen a couple instances of are approval of a board for a 3% pay increase each year. Well, unfortunately, if you get several years out and it's 3%, 2%, 5%, if somebody starts to question a pay rate as you work backward through those minutes without actually having actual rates and only a percent increase, it can be very difficult to kind of back into what their ultimate pay rate should be. So we really recommend for pay rates to be approved rather than just percentages, if possible, by your board. The other piece that we have are timesheets, making sure that they're approved, especially for paid time off. We had a small government one time where they had a part-time employee that was also in charge of their accounting software. What happened was, if they were working part-time and let's say they were supposed to work 30 hours, let's say they worked 26 and they wanted to use 4 hours of PTO, you would have thought it would have been 26 hours of regular, 4 hours of PTO. They were doing 30 hours regular and then 4 hours of PTO on top of that. So getting that extra 4 hours there. So make sure that any time off is being properly approved and reviewed on a regular basis. On the cash receipt side of things, again, you're just kind of asking ourselves what could go wrong here. Ultimately, funds could be credited to the wrong customer account or ultimately could be stolen by the employee and ultimately not recorded at all. So you want to make sure that you're reviewing any manual adjustments, whether it comes to cash receipts, accounts receivable, or whether it's journal entries in general, especially related to those cash or accounts receivable accounts. And that could ultimately lead to accounts receivable not being collected due to failure to follow up on past due amounts. So just a couple of items to consider here for examples as it relates to cash receipts. Want to make sure here, again, trying to maintain that segregation of duties and trying to separate the duties of handling those cash, making the deposit, and if you do have the ability to make a deposit log, ultimately entering the deposit into the accounting software, and once again, reconciling the bank statement on a monthly basis. So just a couple of items that you could have our daily cash receipts report showing revenue by major category, as well as the receipt of the date of the deposit should be included. So just the more details that you have related to the receipts, the better it is and the better audit trail that you're leading there related to cash receipts. So just a couple of suggestions that we have here. Again, maintaining if possible, if you do have enough individuals to maintain a deposit log. Ultimately, hopefully that's by somebody other than those entering it into the accounting software, because if they're just maintaining a deposit log and then that same individual enters it into the accounting software, obviously those two are always going to match if it's the same individual. But if you could have more than one individual, to segregate those duties out, that would be the purpose of that. You also want to have a copy or logs check into the individual to enter or record. So again, that's to follow up on that deposit log that was mentioned there. And again, creating any invoices if possible for any outstanding amounts owed to the government. And then always give receipts when it comes to payments received for your government. And again, that protects both the individual constituent as well as the individual government as well. So moving on to the bank statements, and again, I think I've already hit on most of these, but again, just an item that you can have a copy of a bank statement sent somewhere other than to the government. So if you were to have a board member that maybe you want to send copies of those bank statements to, you could probably set that up with your bank, with any bank, financial institution. They may charge an additional fee, but it may provide additional assurance there related to that if you do have that bank statement going to another individual rather than to the government directly itself. Again, if possible, having that reconciliation completed by somebody without any cash duties, but at a minimum, having the reviewer include that, or having the reviewer review the bank statement on a monthly basis. And that includes reviewing the canceled check, verifying that they have the appropriate signatures, reviewing the endorsements, and as well as the vendor's pay. Just kind of doing a high-level spot check for anything unusual that should not be there included into the bank statements itself. So that leads us into the fourth element of information and communication. And ultimately, in the blue box here is the important part. This is trying to ensure that the financial information is accurate and communicated timely. Again, if you fall behind in reporting that information to the board, maybe you're 2 months behind, 3 months behind. Again, that's not super timely. And you want to make sure that as much as possible, you're providing that information to them. This does include internal and external interactions. So as much of that communication, whether it's internally amongst management or externally amongst your board, maybe your external auditors. And again, you're ultimately just trying to make sure that that reporting information is appropriate as much as possible and accurate. As it comes down to communications with those board members, again, as much as possible when it comes to the monthly meetings, you just want to try to have included a discussion of any unusual items. Hopefully they would be asking about it, but we kind of recommend to kind of dovetail that as much as possible or spearhead that off and just provide that information to them when you're providing that financial information. And the same is true with providing a budget to actual and maybe going over any variances over a certain threshold. That's part of just the monthly meeting, just to provide them with as much information as possible as a board member for their fiscal responsibility. And then finally, the last element that we have is just related to monitoring. So the last component here is related to just the controls, making sure that you're reviewing that information and continues to operate efficiently and effectively. So this is where it just kind of comes full circle, and it's always a process that's in place to ultimately assess the quality of the internal control. And the second bullet point is what's most important, is just making any modifications as necessary. As we led with earlier, it is a process. It's not like you come up with your internal controls. They're not the same as they were 50 years ago, 20 years ago, 10 years ago. 6 years ago, pre-COVID. I think a lot of information, a lot of internal controls are different now than they were pre-COVID, and that's ultimately leading to the ongoing process through the normal operations of your organization. So just to build on that a little bit further, again, you want to just make sure that you're determining whether the internal controls continue to be relevant. A lot of times as part of the audit, we may be asking, why did we do this? Well, that's the way we've always done it. And sometimes it just takes taking a step back and making sure, does that make sense? Are there any new risks? Should we be doing anything differently? And again, understanding the importance of even small governments. You may not be able to put every control in place, but try to put as many controls in place as you can, even for your small governments. And that's where getting the board involved can include that. On the next slide, we just have a couple of examples related to monitoring. Again, we've talked about the bank reconciliations already, but again, even if those can be reviewed by somebody other than the preparer, and again, that can be a board member that we've seen fulfill that role in the past just to segregate those duties. When it comes to cash receipts, again, just looking at maintaining a monthly comparison of the actual receipts to budget receipts with government that may not always line up, but for the most part, again, it gives you a pretty good idea of what the actual receipts should be in comparison to the budget, and potentially even selecting a few transactions just to kind of work backward and spot check them, similar to what we do for the audit. You can do that throughout the year within your organization to make sure that those controls are in place properly. Similarly, for the cash disbursements, again, just looking at that monthly comparison to the budget versus actual. Again, making sure when it comes down to the procurement card that somebody else other than the card holder is performing that reconciliation and making sure that all receipts are maintained throughout each month. And then also, again, you could potentially select a few transactions to assure proper recording. So just a couple of other practical considerations. Controls, again, will change and make up as the accounts and transactions change. I know for most part, governments, that's fairly comparable from month to month, from year to year, but you just want to make sure that the accounts and the transactions are reviewed and that the appropriate controls are maintained. You also want to make sure that at a minimum, your policies and procedures are reviewed annually. I know we typically ask those as part of the audit process, but we really recommend for internally for those to be reviewed throughout the year. I say it's a little bit easier to keep changes made and make sure that those are updated appropriately in your internal control narrative if that's maintained throughout the year versus waiting until the end of the year to update those. And again, if you were to have any changes in key personnel or changes in software application, that's a great time to step back and say, okay, are we still following what the narrative has for our internal controls, or do we need to make some tweaks or documentation changes? The other item that I alluded to earlier is just a rotation of duties. Again, sometimes misappropriations are discovered simply by having another individual perform those duties. Excuse me. So whether somebody's on vacation or whether you just have a rotation throughout the year that somebody must fulfill those roles, again, that can sometimes discover a misappropriation. Just a couple of duties to keep in mind. Again, typically those key functions you may want to consider rotating duties. Again, are the three key ones there: your payroll, cash disbursements, and cash receipts. So just to wrap up, a couple more slides here before I turn it over to Erin, but just a couple of board member oversights. As a lot of times somebody new may come onto the board and they're asking, well, what exactly does it mean to have fiscal responsibility and what is their role? And I think there it's important to develop expectations on what they should be looking at, what they should be reviewing, obviously keeping them informed of any operational changes. And again, really using that budget versus actual as a guide and something that they can follow for that. The other key piece is just to allow adequate time at meetings for a financial review. So whether that's as sending out information in advance so they can absorb that, not just giving them the report at the meeting and they're kind of rubber stamping that approval process. Again, they do have that fiscal responsibility as a board member, and encourage them to ask questions, even if it's not in a public setting, maybe it's not at that meeting, but maybe it can be privately done and you can have more of a dialogue to help explain any questions that they may have. So just to wrap up here on internal controls, again, we really recommend to establish written policies and procedures that are communicated to employees on a regular basis, not just at their time of hire. And ultimately, you want to make sure that there are processes in place that they are being followed throughout the year. And again, if they are deviated from, making sure that the appropriate discipline is taken related to those. If you were to ever borrow any policies or procedures, we see that sometimes within governments, a borough may call a different borough and ask them how they're doing something, or a school district may have a policy or procedures that's set out by an organization. Make sure that you're tailoring that to your organization so that it's properly documented and appropriate. And then the other piece that I just wanted to mention for internal controls, you always want to perform a cost benefit analysis. If you're a very small government and you only have one check signer and you're like, well, we don't want to hire somebody else just to have a second check signer, it may not make financial responsibility to do that. So again, always just performing a cost benefit analysis related to the internal controls. On the next slide is just a summary of the 5 elements of internal control. Again, it's really kind of just a very high level summary of each of those elements. Again, I think all of the elements are being reviewed on a regular basis, primary focus being on those control activities right in the middle there in those highest risk areas, and establishing the appropriate policies and procedures for each of them. The last item I just wanted to point out as we relate here, it just relates to the accounting software. So it talks about on the next slide, just restrictions, permissions, and accounting software. So without stealing Bob's thunder here a little bit, just you want to make sure you're reviewing any logical access, set editing permissions, and having unique passwords related to accounting software. So just a couple other internal controls from a high level perspective to keep in mind there related to internal controls over the accounting software. So with that being said, I'm going to wrap it up and turn it over to Erin to go over some details related to fraud.
Thank you, Kevin. So for the rest of our presentation this morning, we thought it would be good to kind of flip the other side of this and see what happens when the internal controls that Kevin went through aren't in place, or they are in place, but maybe they aren't being adhered to consistently. And so in sort of the worst case scenario, we have this concept of fraud. So just to start out by defining what is fraud, fraud is a breach of confidence or another covert action that is designed to elicit personal gain or some other advantage. And while it doesn't always have to be financial in nature, it typically is. And then it's also a situation where there's an attempt made to hide the act from the victim, right? No one is running around bragging to their coworkers that they are committing fraud, because the only way that that continues is by not having other people know about it. So then we take that a step further, and then we have this concept of occupational fraud. So what is occupational fraud? The Association of Certified Fraud Examiners defines occupational fraud as the use of one's occupation for personal enrichment through the deliberate misuse or misapplication of the employing organization's resources or assets. So simply put, it is fraud committed by the individual against the organization that employs them. And then we further break that down into three types. We have asset misappropriation, corruption, and fraudulent financial statements. And we'll kind of talk through each of these on the next couple of slides in terms of what they are and what are some examples. So asset misappropriation is sort of the, I don't want to say most common, but it would be the easiest for one individual to perpetrate if sound internal controls were not in effect or were not operating the way that they should. And asset misappropriation can include things like physically stealing cash, stealing supplies, or even inventory. Kevin talked about payroll schemes for fictitious employees, or here I call it a ghost employee. So having a clerk go in and enter information into the payroll software for an employee that doesn't actually exist, even though maybe you provide an address and a social security number, a date of hire, a pay rate, and coincidentally, their direct deposit links to your personal bank account. That could be asset misappropriation as well. Check tampering, so writing checks to fictitious vendors, maybe a related party, a sibling or a friend that has their own company that maybe didn't actually provide services to your organization, but a check was written to the vendor paying as if they had provided services. Expense reimbursement schemes, and making personal purchases on an organization's credit card. So, going to Lowe's because I need to pick up some supplies to fix a sidewalk out front. But, oh, hey, while I'm here, I think I'm also going to pick up a couple of things that I need for some home improvement. So anything like that can also be asset misappropriation. A second type of occupational fraud is corruption. And I think we tend to hear more about this, especially at higher levels of government, because this typically is a more involved and elaborate scheme. It typically involves multiple individuals, and it could include things like a conflict of interest. So, you put out a bid for a construction project, and perhaps suppliers collude to manipulate those bids, or they provide kickbacks where the suppliers pay some type of bribe in exchange for favorable treatment. Similarly, you have bribery, which is the abuse of entrusted power for gain. And this could, as an example, be payment by an individual to a government official in order to secure a contract. Locally, I will tell you, recently we had a local government that was in the news because there was some concern that some elected officials received sports tickets to a local sporting event. Now, there was an ethics ruling, and the value was ultimately deemed to be immaterial. But on the flip side, if we're looking at something like Super Bowl tickets or World Series tickets that have a much higher dollar value, sometimes things like that can absolutely be involved with corruption. And then the third type of occupational fraud is producing fraudulent financial statements. For a business entity, this could be something like understating sales in order to try to minimize their taxable income. For other organizations, obviously, many of the folks on this call are not going to be paying taxes within their organizations, but maybe it's overstating your sales or other revenues or understating your expenses just to make your financial statements look more profitable and appear to be in a better financial position. It could also be improper asset valuations, like overvaluing property more than it's truly worth at fair value, or overvaluing receivables above and beyond what is truly collectible. So anything like that, those fraudulent financial statements, those are all various examples of occupational fraud. So why are we talking about this? Well, again, when I defined occupational fraud, I referred to the Association of Certified Fraud Examiners. And for those of you who may not be aware, this organization conducts an annual study that they then publish the results. You can go out, you can Google it. This is complete public information. You don't have to have access to anything fancy to go and find it, but they put out an annual report to the nations. And so these next several slides are various snips of key findings and data points from the 2024 report to the nations. And again, I think it shows what the sort of end result is when internal controls are not in place, or they're not operating, or they are circumvented just because the oversight that should be in place at an organization isn't there. So we're going to start with sort of some overarching findings, and then we'll kind of dig down into specific to government organizations. But this report found, if you look on the left side of this graphic here, that government organizations in that dark green bar, typically fraud identified by this study, reported median loss of $150,000, which was right in line with the median loss due to fraud for both public and private companies, and almost double what the study saw for nonprofits. Then if you look over on the right side of the bar chart there, if you add in public administration, government and public administration combined actually tied the real estate sector for the fifth largest median loss when you look at fraud losses by industry of $200,000. So again, I think it starts to put some big dollars, and these are median losses, right? So trying to weed out any outliers, but it really puts into perspective the financial implications when fraud ends up occurring. So I want to start here on this next slide, looking at the middle slide. What levels of government are victimized by occupational fraud? And I'm sure there is no surprise that almost half is at the national level, but then you do see that state and local governments more or less split the remaining pie chart there. So local governments do make up almost 1/4 of the occupational fraud that was found in this survey. And on the right, you see that the longer a fraudster has worked for an organization, the more costly it is. And that makes sense, right? Because the longer they're around, the longer they get comfortable doing the fraud schemes that they're doing. Maybe they have received a level of trust, and so people have sort of backed off reviewing their work, and the fraud is allowed to continue. And so for those individuals that have been around for less than a year, the median loss is typically around $50,000. But when you get to 10 years or more, you can see that median loss has significantly increased to about $250,000. Why are we talking about this? So we went through all kinds of internal controls, and this report refers to them as anti-fraud controls. So I'm going to use those terms interchangeably here. Not all internal controls are necessarily anti-fraud, but I think by default, they do work to try to either prevent, detect, or correct potential fraud and errors as well. But the presence of these anti-fraud or internal controls that we've talked about is associated with both lower fraud losses and quicker fraud detection. And so 82% of the victim organizations that were interviewed in this study have modified their anti-fraud controls following the fraud. And an additional 27% of the modifications were expected to be extremely effective in preventing similar frauds in the future. And so the last sort of data point there, the bottom of the left-hand graphic, shows that more than half of occupational fraud occurs due to the two things that we keep saying: lack of internal controls or override of existing internal controls. So now let's look at government-specific fraud. What are the characteristics and elements of fraud specific to government organizations as a result of this study that was performed? The study included 296 total cases. As we've already said, the median loss was 150,000, but the average loss, if you look at that number, that is a staggering number, over $2.3 million. Now, again, we have noted that national level governments are going to make up almost half of the study. And you see on the right side there that the median losses are going to be higher. I don't think that's any surprise, but $2.3 million with a median loss of 150,000, I think is really eye-opening, because I would argue that I don't think any of your organizations can really stand to lose that amount of money. It truly is a huge financial burden if fraud occurs within an organization. So this next slide just quickly is looking at common occupational fraud schemes in various industries. And you see that government and public administration is sort of in that red bolded box at the bottom. The main point I wanted to make here is that more than half, 52% of cases included corruption. Now, obviously, if you foot these don't all add up to 100. So in many cases, there were multiple fraud schemes conducted within even just one organization. But corruption, again, I talked about the fact that that typically involves collusion with multiple people. And it's a very labor intensive, generally, fraud scheme, but 52% of fraud cases at the government and public administration level industry included corruption. 24% of cases had some sort of billing scheme. And then again, you can kind of see all of those other different schemes throughout. I'm not going to go into a ton of details there, but again, I just think it provides some interesting data points on the types of specific fraud occurring within the government industry. So again, it's definitely more common at the national level, but top 3 ways fraud is detected, and we're going to talk about this a little more on the next slide as well. 44% of frauds are detected via tip, 18% through internal audit, which is different than the external audits that we are more likely conducting for you. 11% conducted in a management review, which is also a pretty common internal control, just having, again, that second set of eyes on bank reconciliations or journal entries or whatever is being performed by an individual, just having someone else reviewing that work to make sure that it looks reasonable. And I think it's also interesting to note the bottom of the left graphic here that government organizations are much more likely to refer cases to law enforcement than their private and public company and nonprofit counterparts. So 73% of cases in the government sector are reported to law enforcement versus 55% in private companies, 49% public, 52% nonprofit. To me, that's not entirely surprising. When you look at nonprofits, generally they have probably a lot less financial capacity to bring in attorneys. Not that governments always have all of the extra resources, but a lot more. And I would argue a lot of private companies probably also want to keep things hush hush. And so the rationale of not wanting to push it through to law enforcement and with the likelihood of it getting into the media is probably a lot different as well. And you can see then on the right graphic that more than half of the perpetrators had worked for the victim organization for 6 years or more. But interestingly enough, perpetrators with a tenure between 1 and 5 years actually caused the highest median loss. So again, just some interesting data points to share within specifics to government organizations. And again, we talk about the importance of internal controls. The lack of those controls in 32% of cases has contributed to occupational fraud. We talked about the override of existing controls and lack of management review. But then to a lesser degree, things like lack of competent personnel. A lot of this is, we've talked about this, Kevin talked about it. And it's just kind of reiterating the importance of all these things. Poor tone at the top contributes to 8%, lack of independent checks and audits. So all of these things, not just the individual control activities, but again, the control environment, the overall monitoring, they all factor into making sure that fraud can hopefully be completely prevented. If it's not going to be prevented, then hopefully detected in a timely manner before those losses get astronomically high. This slide I think is interesting because I hear a lot of times, well, you're the auditor, shouldn't you have caught that? And if you look right in the middle, you see that external audit is only responsible for detecting fraud initially in 3% of cases. That's not to say that your auditor is not doing their job sufficiently, because candidly, our job as your external auditor is actually not to detect fraud. There are certainly protocols that we have in place if we do detect fraud that we have to adhere to, but you can see that by accident is actually almost twice as more likely of a detection method. And then as you go up again, we talked about the tip being the biggest detector of fraud. And who ultimately reports that? Your employees are going to be your biggest source there, 52%. So in more than half of the cases, they're the ones with their eyes and ears in the day-to-day stuff. When they see things, they hear things, they're going to be most likely to report. And then again, you can see the other individuals that are a little less likely, but this is kind of how fraud ultimately gets detected initially. So I'd like to kind of start wrapping up here talking about the fraud triangle. And this is a concept that we use in our world, but really these are three elements that you see within the triangle generally are all present in order for fraud to occur. So we're going to talk about each of these on the next couple of slides, what they are. And we're going to start with pressure. So somebody has to have some sort of incentive or motivation to commit fraud first and foremost. That could be things like personal financial obligations, such as buying a new car or a new house and needing to be able to pay those bills, living beyond their means, keeping up with the Joneses. It could be a personal habit, such as a need to be admired or an addiction, but it could also be an adverse relationship with your employer, the feeling of being overworked and underpaid, having fear of an unexpected layoff and fear of the future. So all of these things are potential pressures or incentives that could contribute to an individual wanting to perpetrate fraud. But the pressure and incentive doesn't just happen in a vacuum. You also have to have opportunity. Opportunity is the second part of the fraud triangle. And some of the characteristics there are operating characteristics. So the access to large amounts of cash being maintained on site, accessible inventory that can easily be stolen, rapid turnover of employees. We talked about employees being 52% likely to be the ones that detect and let somebody know that fraud's occurring. Well, if you have rapid turnover, it's less likely to be to come to light. There's also a concept of a level of trust. And again, when we looked at those different statistics, those data points, individuals with longer tenure with the company tend to be able to get away with more because they have proven themselves, generally speaking, they've gotten a level of trust, and maybe folks have gotten further away from really overviewing their work. And then again, what we've been talking about this entire presentation, internal control problems, things like a lack of segregation of duties, absence of those mandatory vacations or rotations of job duties that Kevin discussed, and just a failure to consistently enforce the need to have those standards and those controls in place. So you can have the pressures and you can have the opportunities, but the third piece that is really prevalent within that fraud triangle is the rationalization. It's the attitude. It's being able to talk yourself into the fact that you're really not doing anything wrong because you're just borrowing money. You're going to give it back. No one's going to actually get hurt. It's only temporary. The company owes me. All of these types of thought processes contribute to the fraud triangle and to being able to ultimately get comfortable with the fact that you're not doing anything wrong. So to wrap up, and there is a quick poll question if you did not see that pop up. The best offense to fraud is a good defense. The best defense is all of these controls that we have been talking about. And hopefully having those in place will help you to ensure that you have done everything possible within your organization to prevent fraud, or at the very least to detect and correct it. So that wraps up our presentation. And I'm going to turn it back over to Christina, who I think will go ahead and give us our next break.